Hey Credit Warriors, Credit Shifter here, and today we are going to look at 5 tips for building your credit fast. So, number 1, avoid unnecessary hard pulls. So a hard pull on your credit report, it's what lenders do when they're making a lending decision, okay? They do what's called a hard pull or a hard credit inquiry, and this can drop your credit score by up to 6 points, okay? It's not a huge drop, but if you have a lot of them on your account, it'll drop your credit score more, and it also just looks bad on your credit report, okay? Because it looks like you are desperate for credit, applying for, credit products here and there, okay, a load of hard pulls, etc. And they take 2 years to go off your account as well, by the way. So how can you avoid unnecessary hard pulls? Well, literally just don't apply for credit cards that you're not going to get approved for, all right? If you have a credit score of like 630 or something, don't go and apply for the Amex Platinum or Citi Prestige, which are premium credit cards. You need a credit score of at least 700 to get approved for those, all right? Don't apply for credit cards you're not going to get approved for. Go for something like the Capital One Platinum or the Discover It card, something low down that's going to help you build your credit. And then in the future, once you've got a good credit score and you know that you're going to get approved, you can go ahead and apply for more premium cards. Number 2, maximize on-time payments. Now, every month you want to make sure that you do actually spend something on your card so that you can pay it off at the end of the month, okay? It doesn't have to be anything big, because remember, when you've just applied for your first credit card, could be something like the Capital One Platinum that doesn't earn any rewards whatsoever. It's just helping you build your credit. So just buy a cup of coffee or something and pay it off at the end of the month, okay, when your bill comes, all right? So it will report an on-time payment. Now, at the beginning of the credit building process, payment history is a part that you can focus on, because other parts like your credit history, age of accounts, etc., those take time to grow and have a positive effect on your credit score, okay? Age of accounts, by nature, it takes time. But the payment history, you can actually increase, quite a lot by adding more and more accounts that are reporting on-time payments each month, okay? So if you have one card, it's going to report 1 on-time payment per month, so 12 a year. If you have 2 cards, it's going to report 24 on-time payments per year, 3 cards 36, and 4 cards 48 on-time payments per year. So the more cards that you have, the more on-time payments can actually get reported to your account. Now, in the book Your Score by Anthony Davenport, excellent book, I'll put the link in the description, by the way, if you're interested in it. He says that according to what he knows, and he is a credit expert, you can actually get a credit score of over 700 in 90 days by having 4 accounts reporting on-time payments. 2 of those accounts, though, are authorized user accounts, which may give you a history of on-time payments that's even longer due to the fact that they report the entire history of that account, not just the time that you've been on it. And we'll talk about that in our next section. So number 3 is become an authorized user. So you may be thinking, how could I get, 4 accounts reporting on-time payments right from the beginning of building my credit? Does that mean I'm going to go through an application process and have 4 hard pulls right at the beginning? Well, no. Some of those accounts could be authorized user accounts, okay? So authorized user accounts actually don't require a hard pull to set up. Basically, you need someone who is trusted, a family member or whatever, who has a credit card, and the account needs to be in good standing, and they basically just add you to their account as an authorized user. Now, there are several criteria for the account. You don't want to have any missed payments on there. You want to have low utilization, so preferably under 30% or even lower. And then for the card itself, you want it to report to all 3 bureaus, okay, all 3 credit bureaus. Some credit cards, the authorized user version won't, okay? Normally the main card, pretty much all cards, will report to all 3 bureaus, but often their authorized user cards will not report to all 3. So you want to make sure that you've got cards reporting to all 3. You also want to make sure that the card reports the complete history, not just the time from when you got that card. So notably, American Express historically hasn't done this. They haven't reported the complete history, okay? I don't know if that's changed now if you're watching this video in the future, but in general they only report to the credit bureau since the time that you became an authorized user of that account, not the entire history. So 4 cards that fit the bill, or 4 banks that fit the bill, would be Capital One, Discover, Bank of America, and Wells Fargo. And obviously these change from time to time, so you do want to kind of do your own research. But yeah, just make sure that the card reports to all 3 bureaus and it gives you the full history. And then you'll benefit from a history of way more on-time payments than just since you have the card. If the card's like, 2, 3, 4 years old, 5 years old, whatever. Number 4, watch your utilization. So when you first apply for credit cards, many of the cards, especially secured cards or even non-secured, but credit builder starter cards, have very low credit limits. For example, $300, right? So it's really easy to max it out, and you don't want to do that. You want to maintain low utilization. So what I would recommend is, if the card doesn't earn any rewards, then you don't really need to even put much spending on that card. If it is something like the Discover It that might give you cash back, so you do want to use it, I would recommend just pay it off several times a month, okay? If you have a $300 limit and you bring it up to like $250 or something mid-month, pay it down before your closing date, okay? Maybe you pay off $200 before it closes, and then it reports a $50 balance, and then you then pay that off and get that on-time payment from it, okay? But you do not want your utilization too high. Credit utilization, of course, that's the amount of your total credit line you're using. So if you had a $300 limit card and you spent $200 on it, you'd have a 60% utilization. And likewise, if someone else had a $1,000 limit card and they spent $400 on it, they'd have only 40% utilization. So even though they owed more money than you did, they actually would be viewed more favorably by the credit bureaus because their utilization was lower, okay? That's just an explanation of credit utilization. So just try to keep your utilization low. Under 30% is good, under 10% is even better, and spend evenly across all your cards. You don't want one card at 10%, one card at 50%. Just try to keep it under 30% on all of them when they report, okay? If you go a bit over that during mid-month before it reports to the credit bureau, doesn't matter that much. And number 5 is always enroll in autopay, okay? So you do not want to miss a payment, especially if you're trying to build up loads of on-time payments to help your credit score grow. You do not want to stab yourself in the back or shoot yourself in the foot by missing a payment. So what happens if you miss a payment? Well, first of all, you'll be hit with a late payment fee, okay? So that'll be probably around $35. Then what can happen is if your payment is 30 days late, it will get reported to the credit bureaus as a late payment. So if you do miss your payment, don't worry, it's not going to get immediately reported to the credit bureau. It's only going to get reported if it's 30 days late, but you do obviously want to pay on time because you don't want to have that late payment fee. Another thing that can happen, normally if your payment is 60 days late, is that you'll get hit with a penalty interest rate, okay? Your interest rate will go up. Often it goes up to 29.99% or whatever the penalty interest rate on that card is. And it won't come down for a period of probably 6 months, okay? So basically the moral of that story is do not miss a payment, and the easiest way you can do that is by enrolling in autopay, all right? And for different companies, it's different. Obviously, you've got to go into the account online and set it up. Normally, it should be pretty self-explanatory if you're someone who's reasonably tech savvy. Now, I enroll in autopay only for the minimum payment, not for the full amount, okay? Now, the reason I do that is because just imagine if you spent, let's say you spend a couple of $1,000s on air tickets on your account, and the money to pay that off is in a savings account, okay? So you've got this $2,000 bill on your credit card, $2,000 in a savings account to pay it off, but perhaps your checking account doesn't have $2,000 in it. Maybe you've only got $500 in your checking, and you've set your autopay for the full amount, and maybe you forget about it or whatever, but then your autopay kicks in and it tries to take out $2,000 from your checking account. Of course, there isn't $2,000 in your account. So either that payment bounces or your checking account goes into overdraft and then you get hit with overdraft fees on that account. So I always just do it for the minimum payment so that if I do some transaction like that where I haven't got enough money in my checking to cover it and I need to move it from my savings or whatever, I'm just, I'm not going to get hit with that, okay? It's not going to try and take the full amount out of my checking. It'll just take the minimum payment so that I avoid the late payment fee and the possible report to the credit bureaus, etc. All right, and then I can pay at my own leisure. Normally, I'm still going to pay it off in full every month before the due date, and that's another thing. You can set your minimum payment, say 10 days before the due date or something like that, so that you'll normally get an email or a text message, and they say, oh, we're going to process your payment in like 2 days or something like that, and then it kind of reminds you, oh yeah, my minimum payment's going to be processed, and actually, yeah, I bought plane tickets on that card, so I need to move, a couple of $1,000s from my savings and then go and pay it off. Okay. Yeah, that's my strategy. So guys, those are 5 tips for improving your credit while you're sort of building credit, okay, at the beginning stages. We might do 5 tips later on for maintaining your credit, etc. This one was aimed more at beginners, but please leave your thoughts below. I'd love to hear what you think. And I'll put a link to the Capital One Platinum, which is one of my favorite cards for building credit, and also a link to other cards for fair credit that you can use to build your credit. That's from our partner website, creditcards.com. It is an affiliate link, helps out our show. If you want to see the advertiser disclosure, just click show more and it's in the description section below. Thanks so much for watching, guys. Please subscribe if you're new for more credit card tips and tricks every week. We'll see you next time. Bye-bye.